Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Thursday, May the 19th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together to take a look at the market, macro to micro, to take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're looking to come and join us or check us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody here at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and many trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. There is no website. There's no blog. This is not a financial venture, a commercial venture, I should say. It's just us live during the morning, and then during the trade day doing live analysis and live trading. You can contact me at quantumleapfutures@gmail.com and or give me a contact request at Skype, Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you like this video, there's probably a couple years of them up on YouTube. Just do a search for Quantum Leap Futures. You can see what we do every morning and check out our performance against the market. And then if you like what I do, please follow me on Twitter at Crazy2. Okay, so yesterday our main hypothesis was a move up into the 51-53 level, and then a sell-off down through to the 27 to 24.75 level. But we knew it was going to be choppy and waiting for the Fed news. We moved up into that lower price acceptance, the LVN between the two distributions, the double distributions, basically chopped around there most of the day, filling that in, and then tried to make a move up, took out the naked VPOC at 56.50, and then rolled over. Our news came out at 2, so our Fed scene of the crime number is 2053.75, the open of this bar right here. And then, of course, we sold off, went all the way down, didn't quite take out the week low at 2030. We got to 2030.75, and then we bounced from there, came up into the middle distribution of the lower distribution, failed to get back up through the LVN. Beautiful mid trade here, and sold off into the close or into the afternoon. Then buyers stepped in again at that liquidity level. That 34-35 level has been a high liquidity level, and then we rotated back up and we closed at 2042.50, right in balance around that HVN at the 43-42 area. Basically, we closed almost back where we closed on Tuesday. Overnight, they've taken it down and tested the 32.75 level, gone up to the 44.75. We're currently trading in around the Globex VPOC, which is at 36.75. But we'll get into that in just a few minutes. Let's step back and take a look at the macro to micro. I like to start my morning each morning using a candlestick chart with a 9 EMA, 20 SMA. I'm looking for slope and separation, where the trend is being challenged or consolidating, and doing that from a month point of view down, a macro to micro. So beautiful trend up for the last few years. End of 2015, they challenged the trend. They broke below the 9 and the 20, took it back in October and November. December, they challenged it again. January and February, we fell out of that, fell below the 9 and the 20 again. And then in March and April, they took it back, and so far in May we're coming back down, and we're testing the 9 and the 20. We're getting a bit of a MA hug here and coming to a decision point, but we are holding on the monthly. On the weekly, we had this beautiful move up on the weekly, and now they're coming down and they're challenging the trend. They're below the 9 right now. We're losing slope and separation, but we haven't quite failed yet. We're not really going to fail on the weekly until we get below the 20, and that's currently down in the 1988, I'm sorry, 1987 area. Going to the daily has rolled over. We've got this bit of a head and shoulder pattern with the neckline right here about 1930. I'm using 1931 as my key line in the sand right now, but we are getting slope and separation to the downside, so we are starting to see a trend develop on the daily, and that doesn't get challenged until we get back up above the 2051, and really doesn't violate it until we get above the composite VPOC that is sitting at 6150. Going to the intraday, you can see that the downtrend is accelerating. We're getting slope and separation. We just failed again off of the 20 or the 9 EMA at 2040.75, coming into the RTH session. The 4-hour is in a downtrend, a pretty strong one. On the 1 hour, we've come up and challenged the 20, and we failed, and we're now back below the 9. We are, still in this downward trend, but they are challenging it, or have challenged it, and now we're seeing if we get continuation down. Going to the 30-minute, pretty strong trend most of the night, and then they rallied it back up, violated the trend, and now they've come back down and they're below the 9 and the 20. We're at a decision point. We've got a MA hug going on here, but we are trading below the 9 and the 20. So look for possible continuation pattern down on the downside trend. Going to the 30-minute, the 15-minute, same thing. We're back below the 9 and the 20. Don't have quite slope yet, but we do have separation. Basically, bit of a consolidation. We just took out this naked cross that we created on this up move that was at 2035.75. That's been taken out. There is one right here up at 2041.42 area, but these ones I'm not really crazy about because we crossed down below it and then came back up above it. When these little dips are not as strong as when the market really crosses over, like this one right here that we left up at 2048.25. So we still do have repair work to do on the auction to the upside. On the 5-minute, we do have slope and separation and failing to get back above the 9. So coming into the marketplace, into the RTH session right now, as you move down into the lower time frames, we're seeing some weakness coming into this market. We have a weak low down there at that 2030, 2035 area. So, if we don't hold that 2035 area, I think the 30 will get challenged and most likely be broken and a move down into that 24.75 level. So let's take a look at the big picture. So I've drawn a larger time frame composite or VPOC, microcomposite VPOC that now runs from the 17th of March through to yesterday. Its VPOC is at 2040.50. Supporting the VPOC from the smaller time frame right here, and challenging the value area low. The microcomposite value area low from the longer time frame is 2030.75. I'm going to be using that 31. I'm going to actually probably move it down to the 30.75 level. But currently right now we're inside of value, and still in this blunt area of the composite with all this undetermined fair value. I think today we're going to see a move down to test this 20 24.75, possibly come down into the 2016. But if we do hold the 30.75, more importantly, right now, that liquidity level at 34.35 level, look for them to rotate up back towards the 40.50 and the scene of the crime from Fed at the 20.53.75. Got a bit of a double distribution here with 51 as a target with the microdeposit LVN at 46. That coincides with the double distribution we had the prior day. I've got an LVN from yesterday at 44.25. Really want to watch that 44.25 up to the 46.75 level. But again, going to be very choppy in this area. We don't have any real strong price acceptance up here. There's a lot of undetermined fair value, so I expect it to chop around in this area and be whippy as it's been, the whole time that we've been back in this this zone. Of course, the longer time frame, we're still in this upper distribution, the Gaussian distribution from the last quarter of 2015, and the key level there, and our key support level is the 2016. I really don't get really bearish until we get down below the 2016. Below the 2016, I'm looking for a bigger move, with the main target being the 2006.75. Our weekly ATR is running at 62.60, and our weekly downside ATR target is the 2006.75. So we do still have 2 days of ATR. Our daily ATR is running at 23.58. So if you go 2 days, Thursday and Friday, off of where we're trading right now at 2036, that takes us down to 1988.84 in terms of the available 2-day daily range. So we do have room to get down to the weekly downside target down here at 2006.75. Our upside target, or our critical mass to the upside today, is going to be 2083. So above 2083, we're going to get into hitting critical mass for the week, and we're likely to see the bears capitulate. But we're nowhere near there right now. We're trading 2036, so the hypothesis is we've got more ability to see downside than we do upside. But keep that 83 level in mind, because if we do get above that today or tomorrow, we could see critical mass kick in on the weekly. Okay, so taking a look at the overnight, our overnight low is down here at 32.75. Our overnight high is up at 44.75. And our Globex VPOC is at 36.75. And we have a small LVN here at 35. It coincides with this one right here at 34. 34 is going to be a trade level for me. Between 34 and 35 is that liquidity level. If we don't hold this liquidity level, I'm looking for the overnight low to get expanded in the next 30 minutes or taken out in the IB, the first hour of trading in the RTH. There's another LVN up here in 40 and 39, but this area has got a cluster of long-term price acceptance, so I won't be using that as a trade level. So taking that and expanding out our composite here and taking a look at our levels, I'm going to be using the 34.50 as a key trade level this morning. Below it, I want to be short into the 30.50. I'm going to move this down to 30 50 now. That's going to be our key line in the sand. Below it, target the 29.27, but the next big target below is 24.75. Our daily downside ATR target off of the overnight high of 44.75 is down here at 20.21 and a quarter. So we do have daily average true range to get down into this 24.75 and possibly poke through it and come down and test the 17 level. And then all our levels below that all remain the same. Our key support at 16, next support at 12.75, and then the weekly downside ATR target and the next big target below down at the 2006.75. Our head and shoulders measured move on the 4-hour with the break below the 32 is down here at 2003.75, and then we've got our former FOMC minutes down here at 0175 centennial number, and then our key line in the sand is going to be the next one is down at the 94. Below 94, I'm looking for a bigger move down into the 75. 76 area with next big support at 82.75, that 83 level, which is the measured move off of the daily. Okay, to the upside, we've got this year open and Globex in around 37.75, 36.75, and then we've got this 38.50 level. So I'm going to be using the value area low 38.50 because above that I want to target into the microcomposite VPOC at 40.50. There's a secondary target at 42.50. Basically our close, our naked close, and then our overnight high at 44.75. And right there is that, it's a small LVN. It's not wide, but between the 45, I'm going to use 45 to 46 because, we come up here, we can take out the overnight high, but if we get above the 46, I want to be long into the 49 and the 51.50. 51 was a microcomposite VPOC. It's also the value area high, and I'm going to be using that as a trade level. Above that, we've got return to the scene of the crime at 53.75, our daily upside target at 56. Remember that 56 was the HVN and the naked VPOC at 56.50 from the double distribution day, and we really didn't come up here and trade through this upper distribution. So if we get back above the value area and above 51, I'm looking to see us trade through the 56.75 and come up and test the other side of the upper distribution with resistance coming in at the 59.50 area. And then above that, look for them and target the range high and to take out a return back to the composite VPOC that runs all the way back to the beginning of 2013 at 61.50 and start working our way back up through. So those are our levels. What are my hypotheses? My hypothesis today is to find some responsive buying on the open, chop around in this area, come up and test the 38.50, possibly the 40.50, 42.50, and then find initiative sellers, and then a push down through that 30 and a quarter and a move down into the 24.75. We created a weak low, and I think we're going to try to take that out today. So hypothesis one is a pop, find initiative sellers, and then from somewhere between the value area and the naked close, maybe even up into the 44 area, and then chop around in that area, fail, come down, chop at the 30 level, and then get the continuation wave down into the 24, maybe 21, maybe the 16 area. At least into the 24. 24.75 would complete our hypo 1. Hypo 2 is we open auction in range, come down, and then somewhere between the liquidity level between that 34 and the key line in the sand, find responsive buyers, and then work our way up through, chop around, take out the overnight high, chop around in that 45, 46 level, and then get a continuation wave higher up into the 49 and up back to the scene of the crime up here in the 53, maybe even in the 56, and a late day probe to the other side of that upper distribution. So that's hypo 2. Hypo 2 is chop, drop, responsive buyers, work our way back up, chop at the 46, 45 level, move up into the 49, return to the scene of the crime, and possibly late day probe up into the upper distribution, HVN, and that 59 area. So that's hypo 2. Hypo 3 is we get an inside day, consolidation day down here, and we chop around between the 49 and the 30 level, and we basically do some repair work to yesterday's auction. Yesterday's auction, because of the news, is very toothy. We did not get a late day shift. I was expecting to see a move down the VPOC late in the day down here in this distribution zone down around that 40.50 and 39.75. It never happened, so we could just get stuck in the wicks. You can see the wick right here. We could get stuck in the wick today and basically repair the auction down here and chop around. So hypo 3 is open auction in range, in value, failed to break out a range and chop around in the distribution between 49 and 30.50. Hypo 4, my alternative hypo, is we find responsive buyers, between the 35 and the 32.75, and we come up and we get a strong move up into the 49, chop around in the 49, and take it higher and take back and come and trade through the upper wick. In the last 3 days, we've got this huge wick above us. So basically, hypo 3 and hypo 4 revolves around getting stuck in the lower wick or getting stuck in the upper wick with a take back on hypo 4 all the way up into that 56, 58, 59 level. So those are my hypotheses for the day. Taking a look at the Keltner, we've got our Keltner center line is in line with our 24-hour VWAP and our VPOC, which are both right there in the 36, 37 level. Above it, look for a move up to the upper Keltner to test it at 42.50. That's our secondary target and the takeout of the naked close. And if we stay below it, a move down to the lower Keltner will take us down through the overnight low and down to 31.25. More likely by the time we get there, it's going to be that 30.50, 30.75, and our key line in the sand. So that's what I'm looking at. Gold continues to see some weakness. We've come down. We've broken that 57. We hit our 51, 54 target. We're below the next CLVN at 48, and we're, my hypothesis of working our way back down to the 2035, 30. I'm expecting gold now to come down at least to the 2035, 30 if it fails to get back above the 48. Above the 48, look for it to rebound back up into the 55, 54 level and test the value area high from the value area that we just broke back in, and that's sitting up in the 58 level and just below the composite LVN here at 58.60. Gold to me is still not tradable. It's just been too whippy. It's getting closer. As we get closer to this 1235.30, I'm going to be looking to sell rallies and look for FUBAR, Mr. Sneaky tech gaps to the upside to get short into the 35.30. But we're not quite there yet. I'm going to start watching today and possibly try to get a gold trade on if I get a good setup. today. Taking a look at the news, well, our news was not good at 8:30. Canadian wholesale was was a miss. Philly Fed was a big miss. Unemployment claims a small miss, and we saw some weakness, but not real strong weakness. It was kind of a snoozer. And we've got 10 o'clock, we've got CB leading index, and then we've got Dudley's FOMC member speaking, and we've got natural gas storage. Again, the Fed guys were talking again, and they're looking more decisively hawkish, every time they open their mouth now. So likely, getting more and more likely we're going to see a rate hike in June. It'll only be 1/4%, but they're preparing the market for it. The market didn't really react terribly off of that news yesterday. I thought once they got through that 34 level, once they got down that below that 38 level, that we were going to get a major sell-off, and it just it didn't happen. I mean, we held that 30 level yet again, and rallied back into the close. So it was a good trade, but I was surprised that it held. I thought once it came back down the second time, I did not think that 34, 35 was going to hold. I thought they'd come through and take out the 30.75 and actually go down into that 24. I thought it was going to get very ugly, and it didn't. You can see that that liquidity level is somebody's accumulating there for a bigger move up, and they're prepared to absorb those sells. Taking a look at the flex levels. Again, there's just a ton of crap that we've got, in this area right now, and this causes a lot of rotation. So we expect that a rotational, trading is going to continue, and just keep your wrists tight, because they're going to take it back and forth until we get out of this, especially if we hold the 30.50 level. As long as we're in this blunt area of the composite with all this undetermined fair value and all of this repair work that's got to be done, we're going to see a whippy market, and it's going to be tough to trade, which it has been. That's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.